Hey guys, not sure if you have seen the news for Meyer Blue. It was quite incredible. 50% sold at 3,260 PSF at launch. If I'm not wrong, actually on the first day it already hit 50% at that kind of price. Totally unexpected. I personally only expected maybe only about 35%, but 50% is quite a jaw-dropping experience. Let's just take a look at some of the numbers. I shall not dive too much into details regarding the layout, all this, because these are not the real money makers, right? So we just look into the numbers and then we see whether Meyer Blue is actually a good investment for you. This is the article we've seen already. Prices range from 3,000 plus PSF for 2-bedder, slightly below 3,000 for 3-bedder, also just below 3,000 for the 4-bedder and a 5-bedders. And funny thing is that the 2 penthouses were completely sold out by the first day. Let's not talk about the VIP launch, but the first day on Saturday itself, it was already wiped out. Totally incredible. 10 point something million dollars, how good of a property you can buy, but people choose to go for penthouses. Please do enlighten me if you guys feel that, or if you have $10 million, you will rather go ahead for Meyer Blue penthouse instead of a nice landed. So that is, maybe you can shift a little bit of my perspective on that. Artist impression of Meyer Blue, which looks rather nice. If you go to the show flat, you see the nice blue model, which I personally think is quite special. But if you look at the site plan, not too big piece of land. The previous Meyer Park wasn't that big, but at least they managed to squeeze in a tennis court. But this one, on the other hand, there's only a 40-meter lap pool, not even a 50-meter one. There's only one big building in the middle, and then a little bit of water feature. Pretty much that's it. But in this case, it seems like people are not really exactly buying into this for the facilities lah. For the maps wise, I don't think that schools I've checked already. From what I know, please correct me if I'm not wrong, I don't see any schools within 1 km radius. That's why for those people who are fanatic about schools, I don't think Meyer Blue is the one for you. Fact sheet, 226 units. This is a freehold condo. Previously, it was bought Meyer Park at this land price. Site area less than 100,000 square feet. Unit mix, 2-bedders, 33 point something percent. And the funny thing is that 21% are 3-bedders, 44%, which is quite incredible, goes towards the 4 and 5-bedder. That's why you can see that the clientele that they are trying to aim towards here, the kind of audience that they are aiming Meyer Blue towards is actually the higher net worth guys, obviously, because these are the bigger units, not a very easily palatable quantum for most people. It is very obvious that they are targeting a different bunch of people. Penthouses, 2 of them totally sold out. Incredible, I must say. Maintenance fee not exactly cheap, but if you look at kind of profile that most people that are buying into Meyer Blue, to them this is chump change. I don't think they are gonna be going crazy over this. This is Meyer Park break-even price estimated. So what we are seeing over here is that it's about 2,700 PSF for break-even price, which if we use the launch day price is roughly about 20% profit margin. Not ridiculous, I find it's kind of rather fair value in today's market. This development, funny thing is that even though it was sold on 10 February, but is not subjected to the new harmonization ruling, because it was submitted before 1st of June, which is quite interesting because most people think that after 2022, during the Landor mentioned era, then it will be all post-harmonization, but apparently it's not. If you look at supply in this area within 1 km radius, the last I checked, it was about 5,000 plus units, but once you go up to the 2 km radius, you get 22,000 units. Are quite incredible in this area. Just a rough look over this site, we already noticed there are quite a lot of condos. Quite some of them are rather huge condos. There are a lot of developments that are strong competition in terms of freehold. That's why in this area, if they are not exactly freehold, it's a little bit difficult to fight these guys over here. But Meyer Blue, although it's a freehold, but then again, you're just one of those many in that area. That's why it is not easy to stand out. This is a rough look at the PSF or those that were transacted. This side is the lowest PSF that was transacted. Over on the right side, the highest PSF transacted. So you can see over here that the highest PSF goes towards the 2 betas. In fact, the penthouses were not even the highest PSF. They were locked in at about 3,400 plus PSF. On the other hand, lowest one belonged to a 3 beta. So that's pretty much what you can see over here. Has a rough gauge. If you are a little bit more curious, then you can have a look at the floor level, but I'm not going to be showing the stacks because of confidentiality of all these data. This is the interesting part we will be zooming more towards because we are looking at the resale performance of those that are nearby. Meyer Rise, if we look at those that were transacted after the TDSR period, those that were bought and sold most recently, pretty healthy figures, I would say. In fact, it is quite comfortable for most people if you have a profit gain of about 600 plus 700 plus $1,000. There is only one guy who managed to lose money after the 2013 era. Yes, these are quite good numbers, but on the other hand, if you look at the annualized gains, these are not exactly very nice numbers if you are looking at this from an investor point of view. Then we move on to the next one. 1 million, not much transactions. There are only 3 of them. Profit, I would say not very significant. In fact, there was one guy who actually still managed to lose money. Annualized over here, all of them less than 4%. I would say if you want your investment to be worthwhile, then you'll be looking at easily, I would say 4 to 5% annualized on this chart. Then that will make it more worthwhile. Only one transaction that was a round trip transaction for Meyer House. Interesting thing was that this guy, I don't think he even managed to hit the 2-year mark. That's why he's paying quite a little bit of seller stamp duty. I would say 8%. He must be facing rather difficult circumstances for him to be letting go at 8%. He's making a paper profit of 1.37 million, which is the most incredible one out of all those that we are seeing today. Annualized 9%. This is very impressive. Then again, this is only one transaction, hard to compare. Move on to the next one. Meyer mentioned 400 plus thousand. If you times this and this together, I think quantum is almost about $4 million. Annualized gain barely only 2%. $400,000 profit is definitely not something profitable and worthwhile considering the amount of opportunity that was lost since 2019 to this period of time, about 4.5 years. A lot of things has happened. The market has moved a lot. To make $400,000 with this kind of quantum is definitely not really a worthwhile investment. Finally, we'll take a look at Amber Park. Pretty solid performance, I would say. The highest coming in at 820,000. Personally, I feel that Amber Park is pretty much the most impressive looking one out of all these. Also my personal favorite. I love the previous show flat. Then again, I shall not keep myself emotional. That is something that I would love at that point, but I don't think it was a wise choice to get in terms of from investment point of view. This guy managed to hold on for, I would say, 5 years plus, make 800 plus thousand. If you look at this times this, then it's easily his quantum is way higher. Annualized gain, unfortunately, despite the huge amount of profit on paper, annualized gain is not that much. So overall, there are some decent ones like a 6%, 5%, 4% even. These are pretty decent returns for Amber Park investors. But on the other hand, there are other developments during that same period of time that were making these kind of annualized gains. So that means although location is nice, development is nice, but ultimately if you fail to look at the numbers and stay logical and objective, then your investment in this case may not necessarily be the best. In fact, those guys who managed to flip the other way, they could have easily gotten a lot better returns on their money and then use it better off to buy Amber Park and still manage to stay brand new. I think that's the most important thing, right? Coastline residences, not impressive at all. There's only one guy that managed to hit 5%. Other than that, not many transactions, so I wouldn't exactly say that this is very nice resale performance. The interesting thing is that for most people, I would say even myself previously, I didn't know that Marine Parade was the first one to be developed on land that was reclaimed from the 1960s to 80s. Fun fact of the day. For now, the coast is clear for Meyer Blue. You know this for now. Why? Because in case those of you who have already heard of Mr. Hing Sui Kit's East Coast plan, Long Island plan, if I'm not wrong, East Coast plan should be the Long Island plan. This should be where Meyer Blue is, and that means that with the Long Island plan, this is going to eventually be either blocked by other buildings or your sea view will be further away. That's why in this case it is not exactly rational to be buying for the sea view over here for the long term, unless we're just gonna enjoy maybe the 2-3 years worth of sea view whatever we have before the Long Island line eventually starts coming in. The good thing for now is that the Long Island plan hasn't really had very solid progress or conclusion yet, but eventually you don't want to wait to the extent that when things start happening and then you want to sell, people realize that, hey, something is happening there, it's going to obstruct my sea view. Will I be paying premium? Should I be paying an additional premium to buy it from you next time to offload your investment when I know that as a buyer I'm going to get obstructed sea view? That is the problem that a lot of people, they don't really realize what they are facing lah. At the end of the day, you need to know, why are you buying Meyer Blue for? Are you buying actually more for a status symbol, or are you actually trying truly to build wealth? If you are really trying to build wealth, then I think there are other projects that are much more rational in terms of investment. But ultimately, when it comes to the price, I think 3,200 plus in today's market, I wouldn't say is absolutely atrocious pricing. Pretty okay pricing. I'm not saying that it's a screaming or rather a good buy, but for people who want that address, they want that view, they want the prestige that comes with it, staying along Meyer and buying into this and being the one that pays record high prices. In fact, if you think about it today, if you buy 3,002, 3,003 PSF, you need to be selling at 3,007, 3,008 PSF to actually be making pretty decent profits. Not to mention that it's incredible kind of levels of profits, because quantum is high. The size, if let's say you're just buying a 2-bedder, it's not easy to be moving much. What is your actual ROI? You gotta think about that. So that will be all we have for today. If you feel that you need help, feel free to DM. If you feel that all this data today actually helps you, please help to like, share, subscribe. That will be all we have for today. See you guys. Bye bye.